traders all around the world. This is FXPassion broadcasting you live on YouTube. This is Forex Trading Course 101, and remember, we are in the beginner module. We are trying to build a strategy or a system, and remember the three pillars, right? We need to have a strategy or a system. We need to learn about risk management, how does it work, and obey the rules. And the big one, we need to understand how psychology works. Remember everybody, 90% of traders lose money in the Forex market worldwide, and the webinars are not investment or trading advice. The webinars are for educational purposes only. Don't trade with money you cannot afford to lose, and for homework and or questions you have my Gmail contact, my Skype contact, and the LinkedIn contact. Remember, I have 20 seconds delay on the chat. Hello Annie, how are you? So that being said, let's open a chart, right? Hello George, how are you? So today is what is support, resistance and pivot points. George, I have good news for you, my friend. Today we can talk about statistics, okay? Today it's all about statistics. Oh, Passion, what is the statistic about? What time frame? We have this regarding support, resistance and pivot points. Okay, so in an uptrend or in an up structure, when the market is falling, the market is most likely going to hit what is called a level of support. Okay, let's color code this like this and like this and like this. So this is support. Okay, so in an uptrend, support. In an uptrend, the market is going to reverse, is going to most likely is going to respond or react. Okay, clone at the level of Hello Victor, hope you are enjoying these webinars. Yes, I am. I am enjoying these webinars. Okay, so in an uptrend, we have an uptrend line, right? That is going to confirm our, and remember everybody, this is course 101, okay? This is for the beginner trader who doesn't know anything about the Forex market, who is learning how to trade. Okay, so what is support? Well, in an uptrend, the market when is going to extend and then is going to retrace, right? Extension, retracement, extension, most likely is going to end the retracement at some level of past support. Okay, so what is support? Support are also the highs. The relevant highs are also called the support levels. Okay, so the market is retracing. Okay, where is going to end the retracement? Well, most likely, right, most likely is going to retrace, and the retracement at some level of past support. What is the reason for this? It is just that all traders expect this to be a support level and they all buy this level, or is there more fundamental reason? First answer yes, second answer no. Okay, George, answer to the first question is yes. Most traders trade, the traders that are using support and resistance levels, okay, this is the reason. They are looking, they are monitoring if there are other reasons, so they are expecting the market to end retracement near here. No fundamental reasons, no sir. This is the second answer, no. Now, the Forex market is not fundamentally driven, George. Okay, at least not the majority of the time. So this is support, right? Okay, now we have structural support and we have trends support. Okay, we learned about structure, everybody, and we learned about trends, and we learned about how trends, short-term trends, appear inside the structure. So we are learning what is support. Remember that you have structural support and you have also trend support. Hello Arturo, ¿cómo estás? Okay, so if this is structure, you are going to have also the short-term trends, right? Short-term uptrend, retracement, short-term downtrend, short-term uptrend, short-term downtrend, retracement, short-term uptrend, and we are here right now. So let's color code this in blue. Okay, so this is support. You have the red is structure. Okay, but also when we are going to trade this, you are going to find the same support. Okay, let's take the last extension here. So we are going to find the last support. Okay, like in this, the market made a short-term retracement and the retracement at some level of trend support. So you have support on structure and you have the support on the trend, right? And remember, we have learned that not all highs and lows are relevant, so support levels are going to appear on relevant highs and lows. Okay, so well, support are the highs. Okay, so let's go step by step, let's go slowly. Okay, then we have resistance, which is the same, is just go in the opposite direction. We have a downtrend with the downtrend line, right? So, and you have structural resistance. Let's clone this. So you have structural resistance and you have trends resistance. So let's edit structural resistance, and you have trends resistance. Okay, you have both also when the trend is down. So you have the relevant low on the structure, you have the relevant high on the structure, right? So there you go, relevant highs, relevant lows. Okay, so this is going to help you as a beginner trader, okay, increase or decrease the technical risk. Okay, we learned about the technical risk, so we don't have the crystal ball, right? And the market is retracing on the short term. The short term trend is up and up and up. And guess where most likely is going to end the retracement? Well, at some level of past resistance. Okay, this is resistance and the market is going to go up and hit the wall, right? Hit the wall in here and then it's going to fall down again. Okay, resistance and support. Okay, nothing so complicated, right? And this happens on all time frames, right? We learned that we have structure and short-term trends on all time frames, on all currency pairs, right? So this is support, this is resistance. Okay, now pivot points are a different story. Okay, so if this is support and this is resistance, pivot points are areas, and it happens on all time frames. Pivot points are areas where the market hit the area from both sides. Okay, so this is a pivot point in here. Let's color code this in black. Okay, so as you can see, the market hit the line, the area. The market hit from when it was going from the downside up, hit the wall, and when it was going from the upside down, hit the wall. Okay, this is the specific of the pivot point. So it's an area where the market is going to move up, is going to hit the wall, and is going to reverse or retrace. But you are going to also have on the other side, right? The market is going to move, the market is going to fall, and is going to hit the wall and retrace, react, okay? And then of course going to break the pivot point, but then still is going to move up and down, hit the wall, react, right? Hit the wall here, it's going to react. So those are the pivot points, okay? And remember, you don't have pivot points on trends. This is the difference. You have just structural pivot points. Structural pivot points. No trends pivot points. Pivot points. Okay? We're going to find pivot points on structure, but no trends pivot points. If you are going to find sometimes a pivot point on the trend which is going to appear, remember there are no trends pivot points. It must be something different. Okay? So nothing that difficult, right, to understand. So support is when the market is going to retrace, hit past support, is going to react and continue with the extension. In a downtrend or the down structure, when the market is going to retrace up, short-term uptrend is going to hit the wall, the high is going to hit a low and is going to retrace, right? It's going to end the retracement and start to fall. On the monthly, especially on the monthly chart, we are going to see pivot points. Okay? Now, support and resistance levels are going to help us to predict, okay, to predict the potential future reversal. Okay, but pivot points are going to help us to check where not to enter, where not to trade, where to limit our technical risk. Okay, any questions so far, everybody? Any questions so far about support, resistance? Any questions? I have a 20 seconds delay. If there are no questions, we're going to check the live market and we're going to address one by one. First, we're going to see support, then we're going to see resistance, then we're going to see the pivot points. Okay? No questions, great. So let's open what? Let's open Euro JPY 15-minute chart. Euro JPY 15-minute chart. Euro JPY 15-minute chart. Let's compress the chart. Let's try to find something, some uptrend, some downtrend. Let's see. Okay, there you go. This is the 15-minute chart, okay? And we are going to check this downtrend, short-term downtrend on the 50-minute chart, and we don't have the crystal ball, right? We don't have the crystal ball. Okay, so we were in an uptrend, short-term uptrend, right? Somewhere in here. Let's color code this in black. Okay, this was the uptrend line, and the market broke our uptrend line, right? We are here, the market broke our uptrend line. Okay, now rules of, so rule in order, so it's going to be a downtrend. We are going to look for resistance, right? In order to spot past resistance, we need to connect a high with a past low. Okay, this is a rule. In order to spot past resistance, we are in a downtrend, we want to connect, right? We want to connect a high, the actual high, which is the quadrant, with the past low. Okay, and this low most likely is going to be a relevant low. Okay, so this is what we are trying to find. We are trying to find, if this is the arrow, and let's color code like black. What we are trying to find, a high that is going to connect with the past low, and this is going to be our point of reference. Here we are going to expect the market to turn direction, so extension, retracement. Oh, most likely in here the retracement is going to be over. Okay, and why connect in this manner? Because you cannot, not always the highs and the lows are going to connect perfectly. Sometimes they are going to break one another. Okay, sometimes you have this and you're going to have this. Okay, so this high went through, right? This high went through the low. So let's color code this in. Okay, sometimes this high is going to enter the past low. Okay, or sometimes you're going to have another example. They are not going to touch. You're going to have like this and like this and like this. So let's clone this. Sometimes it's going to happen like this. Okay, there is no perfect. Time to time they are going to connect perfectly, like in here, right? But this is theory. This is the live market. Sometimes they are going to break in. Nonetheless, it's going to reverse, or sometimes it's going to start to reverse before it's going to hit. Okay, but those are areas. Okay, it's not a straight line. It's not you cannot determine the areas to the pip. Okay, so this is theory. This is what we are looking for. Now the live market is going to be a little bit different. So let's check, right? So we are here right now. I'm going to delete. Okay, now this is the first extension. Let me see, this is the first extension. There you go. Okay, so it happens on all time frames, on all currency pairs. We are on Euro JPY 15-minute chart. Okay, so what do we want? We want to see an extension. Okay, and then we are going to try to identify the retracement. So this is the low that we are waiting for the market to hit. So let's see what is going to happen. The market is falling. and going sideways and falling, right? So we have another extension. Okay, extension. Transparency, let's make it like this so you can see the candles. 40%, 40%, there you go. 40%. Okay, now we have extension, retracement, extension. Now the market is moving up, right? So what I can anticipate, okay, is that the market most likely is going to reverse at this level. Okay, it's not a point, it's a level. Somewhere in here I'm expecting the market is going up. I don't have the crystal ball, right? But I'm expecting the market that at this level is going to reverse. Okay, and I can put a counter trend line. We learned about this. Let's see what is going to happen. And the market's moving up, sideways. Let's see. See what is happening, everybody? Let's see, let's see. Where did the market ended the... Wow, Passion, you are a genius, right? No. No, sir. You know, this is basic stuff for the beginner trader, everybody. Okay? But in here, why did the market end the retracement in here? Because the market hit resistance, right? And what we are doing with you, everybody, is we are upgrading your knowledge. So, technical risk. Remember, we learned about if you want to have lower technical risk, right? So you have number one structure, you have number two the trend in the same direction, and three, you are going to have from today on, you are going to have support or resistance or pivot points. Okay, I'm not talking about the 15-minute time frame. Pivot points on the monthly chart. Okay, but this is going to lower or is going to increase your technical risk. So let's make an example. You have a downtrend and you have this example, right? Let me see. You have this example and you have another currency pair. Okay, and you have this example in here. Which one has less technical risk, the left or the right? Let's say that both the left example and the right example have structure down, right? Both have a down structure and both have a downtrends, right? But we are here looking for end of the retracement, and we are going to draw a counter trend line, right? And we are going to draw here a counter trend line, and the market broke our counter trend line on the left example, and the market broke our counter trend line on the right example. Which one, in your opinion, has less technical risk, the left or the right? And of course there are no 100% trades. Come on, don't be shy. Any, George, Victor, Miguel, Max, Eddington, Shia if you are online. Which one do you think is going to have less or lower technical risk? The left or number one or the right? Number two. And then the same goes with support and pivot points. Okay, correct, the right. Yes, yes sir, the right. Why is that? Well, if you are going to check this one, the reversal, and you don't have the crystal ball, but the reversal is happening at past, in this example, right, on the right, the reversal is happening at past resistance. Yes sir. Okay, this one, I'm not saying everybody that this one could not work. Okay, sometimes also this is going to work, why not, right? Sometimes we are going to have a shallow retracement, but when we are talking about statistic and probability, this behavior, when it touches or it goes through or something, has the greater or better probability than this one. Okay, so in a series of 100 trades, if you are going to enter these trades, you are going to have better success than this one. Okay, but this also works. Passion, can I enter on the left? Yes you can, no problem, if you have other indicators that we are going to learn. Okay, so let's continue. We are on the 15-minute chart. Let's see. Oh, we are here right now. We saw this, right? So we have another extension. Guess where we are expecting the next reversal? I'm expecting the next reversal on this low, right? So let's see. I'm going to monitor the market. The market is moving, right? Let's dive in. We can increase the scale. Okay, so the market is moving up. I can draw a counter trend line in here, right? And I don't have the crystal ball. I need to monitor the market. Okay, the market went through the first one and moving up. Let's see, right, if this was the counter trend line, like here. Okay, there you go. This was the counter trend line, right? So let's see what the market is going sideways. Okay, now this one didn't work. Okay, so the second one did not work. The market broke the first level of resistance and now it's at the second level of resistance. Now let's see what is going to happen. And the market, what? I have another counter trend line, bigger, right? Let me see, and not working, right? Market still moving up. Let's see what is going to happen. Okay, and finally went sideways, right? And finally in the end it went down again. Okay, now rule about market behavior. Rule about market behavior. When the market breaks one level of resistance, and the same goes with support. Okay, the market loves to gravitate to the next level of resistance. Okay, remember this, you need to learn this, you need to remember. Okay, this is a rule about market behavior. Sometimes the market does this. Okay, when the market breaks one level of resistance, but the same goes with the support, the market loves to gravitate to the next level of resistance. So the market broke the first quadrant, the first resistance, but it went to the second, right? So you are going to hear the professional trader using the vocabulary like the first level of resistance is holding, or hold it and then again went down, right? Okay, now this was retracement, extension, retracement. Okay, now this is the retracement, right? This is our retracement. No, this is not retracement, everybody, pay attention. You need to learn this. Retracement cannot be bigger or longer than the extension. So this is not the retracement, right? This is not the retracement, and this is not the extension. We learned about this. This is why it's critical, everybody, for you to learn how structure and market works. So this is extension and this is retracement and this is extension, and we have another level of resistance here. Clone, there you go, right? Now we are here right now and we have another level of resistance. Did I clone? Not yet. Clone. So this is one level, this is the second level, the third level, and this is the fourth level, right? Clone. There you go. Okay, but you see the market is in here and we don't have the crystal ball. Okay, now the market is in here. Is the market hitting some level of past resistance? Right? We're going to draw a horizontal line like this. Color code in what? Orange, if you want. So we are here right now, and this level is hitting what? It's almost at the resistance number 2, right? This is resistance number 1, this is resistance number 2, this is resistance number 3, but it went through this one, so we are here right now. Okay, now I'm going to draw a counter trend line, and even though I don't have a crystal ball, I'm expecting the market to fall. Okay, I'm not going to enter right now. I'm expecting the market what? To move a little bit up, maybe until in here, the second level of resistance, and then I'm expecting the market to fall. Let's see what is going to happen. Falling, and bam. See? You are going to hear me say a lot of times this price movement, this price action was predictable, right? Remember, I draw you, I believe 10 minutes ago, the theory, and here is the example where and when the market didn't quite touch, or maybe it did, I don't know, let me see. Did it touch? High touch? Yes, it touched. See? Here this high connected to this low. They connect, they touched the candlesticks wicks, and the market reversed, and of course it fall down, right? Any questions so far about the retracements and the resistance and the extensions? Is it clear for you, everybody, how you're going to find and how you're going to check in the live market? You can say yes, you can say no, you can say I don't agree, you can say I don't know, you can say please explain again. But not problem, everybody, we're going to talk in much details in the coming webinars about resistance. This is just an introduction today, okay? for you to understand what is support, what is resistance. Okay, today this is introduction for you to understand why this price movement is predictable, how you can expect the turn of the trend, you know. And remember, the most important thing what you should learn today, everybody, is that you are not going to learn how to spot resistance and pivot points and everything today, but you need to understand that when you can see support, a resistance or pivot point, this is going to lower your technical risk. This is the main point for this lesson today. Is going to lower your technical risk and is going to increase the probability of success. Okay, now let's go on what? Let's go on GBP what? GBP NZD. Okay, we've been on the 15 minutes. Let's go GBP NZD what? 4 hour chart? 4 hour chart, great. Okay, now we were in a downtrend, right? And the market changed its direction from making lower lows, lower highs to making higher highs, higher lows. Okay, there you go. And we don't have the crystal ball, right? Okay, and we are here right now. I'm going to, let's circle this in black like this. And again, everybody, watch these webinars over and over and over. Well, if we put this technique together with the market structure, you have a higher probability, yes. But to be fair, Victor, sometimes you have everything and anything in the right place and the market still doesn't go your way, you know. I've been in a 95% rates that didn't work. I had the Fibonacci's and structure and trends and Stohastic and RSI and MACD. Everything was, I mean, the only thing that was left was the fact that there is no 100% rate. So I entered a 95 probability trade. It didn't work. The market sometimes just doesn't do what it's supposed to do, right? Uptrend. We are looking to connect a low with the past high. The same, just in the opposite direction. So in a downtrend, we need to, in order to spot past support, we need to connect a low with the past high. Okay, this is for the uptrend. And we are here right now. Okay, this is the trend line. Okay, let's dive, let's increase the scale. Okay, we are here, we are here, we are here. Now I can already start drawing my counter trend line, right? And I want to see past highs. So this is a high in here, right? And let me see, high, retracement, extension, right? Now, okay, now I'm going to expect that the market is going to turn around in here. Why is that? Because the market didn't quite touch, or maybe it did. No, it didn't touch. This low didn't touch this high, but I don't have any other highs from the uptrend, right? So I am expecting the market to start changing, to end the retracement and start moving up in here. Let's see what is going to happen. Okay, broke, right? Now it hit the, I'm going to increase this. Okay, the market hit support, past support, so still valid. And let's see what is going to happen. Okay, this was a deep retracement, but it's still valid. Okay, still valid. Okay, there you go. and finally slowly and finally moved up, right? So okay, he didn't change direction here, he didn't change direction here, but still it didn't break the level of, it went through, right? And reacted, responded. Okay, what I missed as a beginner trader, what I missed and what I should do, of course, is the uptrend line. There you go. Okay, there you go. The uptrend line. Extend the uptrend line. There you go. And I'm going to delete the downtrend line. It's not relevant anymore. Okay. So, question. Oh, why did the market end the retracement in here? What is going to be the answer? What is going to be the answer? Why did the market? How do you know? Okay, counter trendline break, but how do you know that the retracement is over in here? We don't know, we don't have the crystal ball. Okay? But what we learned? We learned about structure. We learned that the market shouldn't break structure low if it's going to continue the structure uptrend. We learned about the trend lines, right? So this price movement here, okay, and we learned about the stop loss and structure. So if you're going to put your stop loss in here, okay, where is it? If you're going to put your stop loss in here, even though if you entered too soon, right, you should be safe. And let's see what is going to happen. And it goes, right, goes up and up and up. Okay, so I was expecting the market to reverse in here, but I know this week is big, right? This is not support and resistance, are levels, are areas, everybody. Okay, it's not a line, it's not, oh, this is support is at 1.87525. no, it's an area. Okay, this is support. All of this is support. Okay, there you go. All of this is support. Sometimes, and we said sometimes the market is going to remember, this is theory, right? The market is going to respond and react exactly to the level. The same as it goes for the downtrend, the same goes for the uptrend. Now in the live market, the market just sometimes is going to break and then move on, right? And this is where it's critical for you to learn structure and trends and everything, right? And sometimes in the uptrend the market is not going to touch, it's going to move like this, it's going to increase the speed, right? It's going to reverse in here and make a new extension leg, but it's not going to touch the level of past support. Sometimes it's going to go through, like in this example, sometimes it's going to touch, sometimes it's not going to it's not going to touch the support. Okay? Nonetheless, this knowledge is going to lower your technical risk. Question: this pair has a spread of 6 pips. What does this do with your chance of winning? Isn't that too much? The answer is no. The answer is no. If you're a beginner trader, everybody, spread has nothing to do with your winning or losing trades. If you are in the right side of the trend, if you are on the right side of structure, spread has nothing to do with your winning or losing rate. Okay? Now, of course, if you go to some exotic pair like Mexican peso, USD, and you have 70 pips, this is another story. Okay? So, the answer is no. George, can we enter when the second big retracement hits the structural black uptrend line, or should we wait for a confirmed uptrend after the second retracement? Great question. What do you think, George? Everybody, how can you answer to George's question? George is asking, can we enter when the second big retracement hits structure, uptrend line, or should we wait for a confirmed uptrend after the second retracement? Which of these strategies that George is saying has the higher probability of success, the first or the second one? And I'm going to delete. Victor, Annie, Arturo, help George out with the question, then I'm going to give you my answer. Let's see if you are studying, if you are understanding. Right? So, the market is moving up, this is the retracement, and the next extension is in here. This is the next extension, and transparency like this. Guess what? I'm expecting the market to reverse. I'm expecting the market to end the retracement at this level, number one, and if the market is going to break this area, then the market is going to gravitate toward this. I have support number one, I have support number two. Nonetheless, the market shouldn't break the uptrend line, and the market shouldn't break the structural low. Correct, George? Yes, sir. Yes, sir. Congratulations to you. You are thinking in the right way. Okay. So we are here. Okay. The market, if you want to put a horizontal line, well, we are almost at past support. So I'm going to draw my counter trend line. Okay. Let me see if the market hit. Yes. Okay. So I'm going to enter this trade. Right. Counter trend line break at past support. Let's see. Oh, we are we are here right now. Okay. GBP and the 4-hour chart. Passion, why did you enter here? How do you know? You have a crystal ball. I want to buy the crystal ball from you. No. Trading is a learnable skill, everybody. But you need to know and you need to understand how the market works, and you need to explain why it works. You need to know how to explain why sometimes it doesn't work. But the uptrend line can be moved. Yes, you can adjust the uptrend line. Okay, so this was the example of support. Now the last one. Oh, let me think. AUD JPY monthly chart. AUD JPY monthly chart. AUD JPY monthly chart. And this is going to be our homework, everybody. Homework. Find pivot points on USD JPY, Euro USD, GBP USD, AUD USD, what else? NZD USD and NZD JPY. Okay? Homework until tomorrow. Find pivot points on USD JPY, Euro, Dollar, GBP USD, AUD USD, NZD USD and NZD JPY. Okay, on the monthly chart, all of them, monthly chart. Okay, now how to find pivot points? We are going to draw a horizontal line, and we are going to move horizontal line from the downside up or from the upside down. It doesn't matter, but we are going to leave it where the market is going to hit the line from both sides. Okay, this is the specific of the pivot point. So I'm going to slowly move. Is this a pivot point? Everybody? Is this a pivot point? It's not, right? Because I need the market to hit the pivot point area from the downside up and from the upside down. This is the specific of the pivot point. So no, this is not a pivot point. I'm going to move it up, up, up in here, checking the highs and the lows, up, up, up in here, checking the highs and the lows, and okay, there you go. This is the first pivot point. And remember, pivot point and support and resistance are areas. You cannot be, oh, it's at 82.779. No, it doesn't matter. It's not to the pip. But here, the market hit from the downside up in here, and here the market hit the pivot point area from the upside down. So this is one pivot point. I'm going to do it again. I'm going to draw a horizontal line and I'm going to move it up, up, up. So this is one. Let me see if I can find another one. Bam. This is the second pivot point, right? Because the market hit this line, this area, from the downside up in here, but also from the upside down in here, right? Here it went through, downside up. Okay, passion I cannot see. Okay, this the market hitting here, right, and here. You need minimum two. Okay, downside up, upside down. Bam, bam. This is a pivot point. Okay, and let's do it again. Horizontal line. I'm going to move it up, up, up. Let me see. Let me see. I have another pivot point, right? Because the market hit from upside down in here and downside up in here. Upside down, downside up, right? And one more. This time I'm going to move from upside down. Let me see. Highs, 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 highs. Okay. And this is the fourth pivot point. The market hit from the upside down, and here downside up. It reversed in here, here. Okay, and it's from upside down. Here, bam. This was the. Okay. And remember, there is no right or wrong. Okay, you can have different numbers. Those are areas. Okay, areas. Why are the pivot points so important, everybody? Why are the pivot points so important? It's because if you take in consideration this pivot point in here, and you could be trading, you know, you go on the daily chart and you have a down structure, and you are trading a downtrend on the down structure, and you have the confirmation from your confirmation time frame, right? Let's color code this in black. Let's color code this in black. Okay, let's connect those two. So you are trading in here. The daily chart, it have a down structure, and the weekly chart, you know, and you have the downtrend, you have everything in place, and your counter trend line breaks and everything, and you are here. You are going to lose money in pips, and you are going to be angry. Oh, this doesn't work, you know. Well, this, when the market hits support, resistance, or pivot points, those reactions are predictable. Okay, but looking here, sometime it touched, it went through. Okay, so you need to have on your chart the pivot points from the monthly Y. I'm not telling you not to trade, but be careful when the market is going to approach the pivot point. Be careful. Or if you have 50, 100 pips to the pivot point, stop trading in that direction. Okay, this is why it's critical to have pivot points on the monthly. Okay, you can have also on the weekly, no problem, but on the monthly chart you need to have pivot points on all time frames that you are trading, because sometimes you are going to lose, and if you don't have the pivot points and support and resistance levels on the higher time frame, you are going to lose without knowing why did you lose. Okay, so professional traders, scalpers excluded, they don't trade here. Okay, they don't sell in here, they are reversing the positions. Okay, scalpers excluded, short-term traders excluded, but the professional traders that are long trader, swing trader, they are trading from the daily to hour time frame. Okay, 15 minutes, okay, still you can go, 5 minutes, okay, but if you move from 1 hour and above, they are not shorting the market in here, not anymore, too risky. Okay, everybody, our time is up. Homework until tomorrow. Tomorrow we are going to check together quickly. Okay, find pivot points on euro dollar, euro USD JPY, GBP USD, AUD USD, NZD USD, and NZD JPY. And if you are demo trading and you find yourself near a pivot point, close your positions or reverse your positions, because most likely something is going to happen. Okay, stay strong in the markets and trade with passion. This is FXPassion signing off.